Dan, it's great to have you. Do you stick with, some of the big majors and those kinds of players, or do you go small and tactical? What are you thinking?
Hi, Kelly. I think that right now we've got oil trading at probably the higher end of a fundamental range. I've said 65 to 85 on your program before. The stocks are still cheap. They're still unloved, notwithstanding the fact they were the best group last year and this year. So I think you can stick with quality. If you want to go down in market cap, you've got to be brave and sort of willing to ride out volatility, because there'll be plenty of that. So big names still a good idea.
Dan, what happens to these names if there's a real flare-up in the Ukraine situation, which would presumably spike the oil price, but not for exactly bullish reasons?
Yeah, I think geopolitical tensions typically are short-lived. You spike the commodity, but the stocks tend to look through that. And so I think, generally things that are bad for the market are going to be bad for energy stocks. So we watch the commodity, but it's got to have some durability. And that's why I think this, kind of fundamental tightness is the real issue. OPEC doesn't have as many barrels as they'd like you to believe. Demand is getting better. And so we've got a tight fundamental market. Geopolitical stuff will be a bit of a sideshow unless it's a really major event.
Were you surprised that the CEO of Exxon was kind of bearish on oil prices this morning?
I don't know if I'd say surprised. They build their business model around much lower prices. And so, this is a bit of a windfall scenario for them. The company's taken a lot of pressure for a number of different things over the past 3 or 4 years. And so adding high commodity price expectations to that list is probably not high on Exxon's agenda. So, no, I think that they have no upside to talking about really high oil prices. They make plenty of money if oil is 60 or 70.
Yeah. And at the same time, the oil price is back up where it was in 2014, but the stocks are nowhere near those levels. Do you think they're going to keep catching up, or should we expect this gap to persist because the climate, pun intended, is so different now?
I think the duration of commodity prices at good levels doesn't have to be this high, but at good levels is going to be the story. So you're right, a huge lag over the last 2, 3, 4 years. That catch-up trade, folks want to say, we're up 15% this year. These stocks must be ahead of themselves. The reality is they're still trading at very attractive free cash yields, and the inflation story is real. The tight fundamental story is real. And so, you let your winners run here. There's still more room.
What are your favorite couple of names?
Yeah, we like the upstream producers. We still love the Permian. I've talked about Diamondback Energy and Devon Energy on your program before. I think those names continue to re-rate as we go through 2022. Schlumberger as a play on higher overall activity. It's also an inexpensive stock in our views. So, I think the real issue here, though, is being involved. Folks have been uninvolved for a long time. I think they're waking up to the fact that this sector has some sustainability to it. No pun intended there. And so, I think we'll continue to see them work.